So if I had to summarize the month of February in one word when it comes to what moved the market, it would be tariffs. We started off the month with President Trump announcing tariffs on imports from Canada, Mexico, China, and the European Union. That of course led a lot of investors concerned with at least the short-term impacts on interest rates and definitely the long-term impacts on that it could have on spending. We saw that with Walmart's earnings showing that even though they did beat quarterly profit expectations, they showed concerns on their 2026 fiscal year guidance, actually lowering their expected profits. That news helped the share price drop around 6%, along with the Dow Jones and S&P 500 dropping around 0.5% and 1% respectively. Speaking of earnings, Nvidia also announced their Q4 earnings and how yet again they beat expectations on the top and bottom lines, which is great, but also yet again share prices eventually dropped, primarily due to the concerns for Q1 expectations. So February being a wild month in the market is an understatement, and at this point in making the video, a lot of us are probably going through even more damage in our portfolios. But let me know in the comments below, how did your portfolio perform in the month of February? Hopefully by some miracle you stayed in the green. Hopefully you guys did better than me. Speaking of my portfolio, surprisingly enough, I was able to stay in the green despite everything that happened that month. For starters, that month my portfolio gained about 4.5% or a little over $700. Year to date, I'm looking at only 0.84% or about $136, which is fair. And all time, I'm still at 46, almost 46.5%, so about $5,200 in profit. Something that I say in all my update videos is that it's always something great to see, especially as someone that's only investing $30 a week. But doing it for almost 6 years shows that it's all about what you're investing into. So every now and then, I may have to make some modifications in what I'm selling and what I'm buying. When it comes to this month, the only sell I made was in UPS. I sold my entire position, which was a little over a share, at $114.54 per share, making me about $134.85, which was actually, unfortunately, a loss. On the dividend side, UPS showed a lot of signs of possibly making a cut to their dividend. They had a downtrend in net income and a downtrend of their free cash flow per share, which is very important when it comes to what you can pay to your shareholders, and that wasn't really something I was excited about. On top of that, there was the entire recovery process, which on one hand, if you may be a new investor or you're somebody that really believes in the company, there are some upsides to UPS. They are starting to trend positively again with free cash flow and net income. But as somebody that had been investing into this company, maybe with an average price of almost $200 per share, I didn't know if I wanted to wait that long, especially with the feeling that there are other positions I can put that money into that would benefit me in that same period of time. One of those companies is Hershey, and Hershey, I was really conflicted on if I should hold that position, but I ended up buying one full share at about $157 per share. On the negative side, it reached a 52-week low, or really near a 52-week low, which was almost $140 per share, and it seems to be the main driving factor was the price of cocoa. Now, on the positive side, that's an external situation, which kind of sucks, but I figured Hershey could get through that, whether they have to increase costs or hopefully the price of cocoa decreases, which actually it seems to be so far. On top of that, they showed a lot of positivity in their finances when they announced their fiscal 2024 earnings, and they showed an increase in net sales and earnings per share, which is always great to see. Again, it was near its 52-week low. I bought it at about $157 per share, and I think at the making of this video, it's almost at $200 per share. So it seems like the right decision so far. Plus, on top of that, with that positive news, it is also yet another position that you can benefit from when it comes to its dividend yield. It has about a 1.85% average in the past 5 years, but their dividend right now is almost 3%. But anyway, besides Hershey, I also bought almost a full share of Nike at $80 per share. It cost me about $77. They did show a lot of positivity with their announcement on their collaboration with Kim Kardashian and Skims, so I wanted to take advantage of that growth, and also it did lower my dollar cost average because I think my average share price is a little over $100 still. Also bought a small 0.155 shares of Broadcom, about $193 per share. That was just my $30 a week, and that was simply just to lower my average cost. And Broadcom is starting to go down, but I'm a long-term believer of this position and what it can do in the AI market. So even though I've been transitioning more into growth stocks rather than solely dividend paying stocks, they're still important to me, and pretty much every position I have pays a dividend. I'm just paying more attention to dividend categories and just overall share price growth. But with that, I still like to track what my potential is for dividends I get paid every year in the long term. So with the next 5, 10 to 15 years. And I also see what that would look like if I continue investing $30 a week or if I stop and just let drip do its thing. So if I let drip do its thing or let the dividends that I make reinvest back into the share price, within the next 5 years, my portfolio would pay me $559 per year, 10 years, $870, and in 15 years, I'd be looking at $1,387 $147 per year in annual dividends. But if I continue to at least invest at $30 every single week, in 5 years, I'd be looking at $739 per year, 10 years, $1,282 per year, and in 15 years, $2,066 per year, which is almost $700 more in annual dividends just from $30 more every single week. I mentioned this in a previous video, but everything we've been going through in February, what we're really starting to go through in March, should just be a reminder and making sure that you have a portfolio that's fairly diverse. But not only that, but those positions are really positions that you believe in. That's especially important for low budget investors like myself, because you're choosing to put every single dollar that you can into the stock market rather than do something else like pay off your credit card debt on top of what you're already paying towards it. So you want to make sure that every dollar you invest is really beneficial for you in the long run. So I'm really starting to understand more about the different sectors in the stock market. Like, of course, I knew there were sectors in the stock market, like the defense sector, for example. One thing I really didn't know is that it's filled with stocks that typically consistently increase their share price and their dividend growth even through crazy times like this. That's why companies like Johnson & Johnson, Procter & Gamble, and Coca-Cola grew so much in February regardless. And another thing that's kind of important is trying to keep cash on hand for these moments where share prices really go down. That's obviously if you can, of course. For me, that definitely would have helped me increase my yield of costs more, because a lot of positions had their dividend yields up or just simply because the share price went down. But regardless, when it comes to dividends, the month of February went pretty well for me. And I'll talk more about that in this video, so hopefully you take time and check it out. But I appreciate you guys taking the time to watch this video. And until next time, as always, take care.